Hey, it's Mike with PriceActionTradingSystem.com, and I wanted to just do a quick little demonstration of a couple of second entries just to show people so people get a better idea of how we enter these things. So this is the market's closed, so this is not live or anything. I'm just going to show you what it looked like, kind of moving bar by bar. And I'm going to show you a short, and then I'm going to show a second entry short, then I'm going to show you a second entry long. And that's really all I'm going to show in this video. This will be something for everybody to look at on a Saturday. I'm going to post this on, it's actually Friday afternoon, but I'm not going to post this till Saturday morning. And it'll be sitting out there for you Saturday morning. And those of you that want to spend some time studying, this is probably a good exercise for you. So, but if you look over here on the far right of the chart, this is what prices would look like um, if we were trading live. We've got a trend working. We had a trend working up. There's two clear measured legs there, and then we were working down here. And so, as you can see, we find a little support down here, and we get the next bar, then the next bar. So we're moving higher. We're correcting it. And notice this was the overnight lows, and notice how we moved below that, and we just kind of been prices have been testing both sides of that, and prices hadn't really figured out where they're going yet. But we had this channel working down, and we had a break. We've already had two fairly equal legs down the low. Now we've had two legs to the upside. But what I'm looking at right now is this little trend channel working down, and we got the first close outside now. So if we get a second entry short that looks pretty good, we may take it. So, and you see the prices are correcting right here. We've made a few bars higher. And then suddenly we got a first entry. That's the first bar that anything broke lower than the previous bar. Notice the higher lows each time until right here we broke lower. That's a first entry short. So if we don't make a newer low before we correct and make a second move lower, then we'll probably get a second entry short. So right now all we have is a first entry short, and it triggered on that little break lower where prices, let me actually make this bigger, make it a little easier to see, but you can see where prices broke lower right there. That's your first in. Notice the new low, count zero. You're moving up, and you finally broke lower right there. So you got a first entry short, and it continued to go a little shorter, and now it's working higher. And we were a little higher. We got a nice bearish bar. We pretty much got two legs up. So what I would do is I'm anticipating, hey, if it breaks lower here, this is a second entry short. I got a nice bearish bar for my signal bar. Notice how that bar, it's closing, looks like one tick off the lows. So that's a nice bearish bar. So if it breaks lower here, especially being away from the EMA, we're probably going to at least get a second entry short back to the EMA, and we may make another leg down like this one right here. So what I would do is as soon as that bar closes, I put my sell stop one tick below there. So just assume that I placed an order one tick below this bar, and we'll see what happens. So there comes your next bar, and look, it triggered my trade, and I'm short right now. I'm going to scalp out with 4 ticks, and then let's just see where that would be. I'm going to scalp out with 4 ticks. So my entry is going to be, looks like 1350. And so I got to go to 1225, assume, to get out. So I'm not out of that yet because we've only gone to 1275. So there's your next bar, and it went to 1225. So we're out of that. We're already scalped out. And notice it did work higher again, but it didn't go above my high here. And that's where my safety stop is. And that's why we put our safety stop where we do. Because if you'd have had your stop anywhere else in this bar, you'd have got stopped out. But so far, you didn't get stopped out. Your runners may have gotten stopped out. We didn't get to see how that bar actually printed, so we don't know if it broke higher first or lower first. I guess it doesn't matter because we were already in the trade, but we would have scalped out now. I guess it would have too. If it would have broke higher before we scalped out, we'd still be in this runner. So I'm not sure if that happened or not. and I'm not going to go dig into it to try to figure out, but we'll just assume that prices, because this is a fairly bullish bar, we'll assume prices broke higher before we scapped out. So we've scapped out now, and we've got a runner going, and we'll move. Our stop will be at break even. So we'll see what happens from here. Look, we're going lower. We make a little higher low there. We correct a little bit more. Now we just had a second entry long, but you wouldn't want to go long there. And now we're headed lower again. I think they would have got our runner right there for sure. And that's what prices do. They come back and take those runners. The ES is very efficient. So you got to catch a good one. This is a range day, so you're probably not going to catch. Well, I say it's a range day, but there was a good trend. But when prices are choppy like they are right here, see how flat that EMA is? When prices are flat and choppy like that, you're not going to get many runners. So, but we'll just see what this trade does. And it just pretty much goes sideways. It still continues to work down. But that's how you would have played a second entry short. Now I'm going to find a second entry long, and we'll go through one of those. Okay, we got an uptrend right here. Notice we made a new high and prices have been correcting. And we actually got a first entry right there. That bar broke above that one. So now we got a first entry. Oh, but notice what prices did. They shot up and we've already got a new high. So the count's 0 right there. Count still 0. Count still 0. Now we're working lower again, but this is the highest bar in the swing. So right there our count's 0. We're working lower, we're working lower. Oops, we got a first entry right there. Notice how prices broke up above that bar. So you had a first entry. They broke higher and turned down. So we got a first entry when we're working lower again. Working lower. And now we got a nice bullish bar. This is an inside bar, but it has a matching low. And this is a pretty strong uptrend. So if prices break above this bar, this is a second entry long. So if I wanted to take this trade, which I pretty much like this trade, I'd put my buy stop one tick above that bar right there. And remember that the signal bar is not arbitrary. If you don't like the signal bar, you can't. Just like right here, let's say that was a trade we wanted to take. That's your signal bar. It's way too bearish to go long. So you can't just arbitrarily say, okay, I'm going to use this one and we'll go long right there. It doesn't work like that. This bar determines everything. And so if this bar is not good enough, because your entry is one tick above it. So really, if you're seeing that, you don't see. Remember, this is to the far right side of your chart, and you don't see all this other. You don't know if that's going to reverse or not. It probably catches you off guard when it does break higher. But here we've worked down. We got our first entry. That's the first time prices broke higher, and here we've got a nice bullish bar. So if we break above that on this next bar, we got a second entry long. That bar is too bearish. And this is an inside bar. Normally we don't like inside bars because they're not as reliable. However, these have matching lows. So we can use this one. If it didn't have matching lows, I would say, no, we can't use this one. Let's move on. That's just a way to filter the trades. And yeah, you'll watch some that'll trigger and make a good trade and you'll say, boy, I missed that. But that's just the way it works. You got to follow the rules. And you'd be shocked how many times people send me their chart and they're not following the rules. And then they wonder why they had a loser. Because it'll work sometimes. It'll work just enough to keep you trying to perfect it, but it'll never work out. So anyway, if we break higher right here, and that's showing you that we've got this is second. We had a little bit of bullishness there, and now this is a second attempt, and we pretty much got 2 legs down. So if we break higher, the trend may continue. So I'm placing a buy stop one tick above that bar. And then boom, we would have got triggered right there. You may not have had time to get that one in because notice how that one closed on its high and then opened on its low and went straight up. I don't know if you'd have got filled on, you may not have got your order in, but let's just assume we did. And so we're long and prices have taken off. We've already scapped out. Our stop has moved to break even, and I doubt we've gotten stopped out of this one because prices are closing on their very high here. So let's just see what happens. We're pulling back again. There they got the break-even stops, so no runner there for sure. And actually, let's move this over one bar. Notice what happens here. We got that low, and you try to go lower once, and then you broke lower here and turned and went out the other side. That's a failed second entry short. So you may get long again, right? One tick, your order would have gone one tick above that bar. But prices and the trend continues, and we're just kind of chopping higher. But that's how a second entry would work. Again, your new high, your first entry, and then your buy stop would have been one tick there, and it takes on off. So I'm not going to keep this much longer than that. That's really all I wanted to show you was an example of a first entry and an example of a second entry. I do want to show you one other thing though, so I'm going to pause it and find an example of it, and then we'll wrap this up. Okay, notice how we've worked up trend right here. We're looking for second entry longs or longs with the trend. We've got a new high here, and suddenly we're working lower right there. And then prices tick up again, so we got another new high. So we got a double top here. Now you can count this both ways, so make sure you hear this. You can count that as a first entry because we didn't make a new high, but it is a double top, so we can count that as a first entry, or we can count that as a new high, right? A double top. It swings both ways. Double bottom's the same thing. You can count it as a if it was off the bottom, you might say, okay, that's a first entry or it's a new low. So, but we're going to say we don't know how we really want to count this yet. We want to kind of see what the price action looks like. So we get the next bar. We're just kind of going sideways. Now here we go. We're working lower. We're working lower. Still a bearish bar. You got a first entry right there. Obviously, you wouldn't want to take a second entry long, so you don't want to count that as the second entry. So at this point, I'd say this is a new high, and we've got a first entry, and we'll kind of see what goes from there. But let me back that up one bar. But look at that right there. That's an inside bar. It's a bearish bar. There's no way if anything breaks higher, you want to count that as a second entry. It's just because all you see is one move down, and this is not a very good. There's no real bounce right there. So, but it does break higher and then turns right back down. So we're going to count that as a first entry. So it's, oops, I didn't mean to do that. So the count's 0, and we're counting this as 0, this double top. Then we had a first entry, and we're working lower. And then suddenly you get a second entry there. So again, not a very good signal bar. So we just missed that trade. That was a trade you had to miss. Even though you got a second entry there, just not a very good trade. I hope that was clear, but we count that. You can count that either way, but it's going to depend on how this works out. But if you draw your little trend line down here, you can see that's all one move down. There's no break until right here, and then you don't really get a retest of that low. There is one other way to look at this right here. There is support across here. So you could look at that as a double test as well, and a second entry long. That signal bar is just one more tick and it closes right in the middle, and that's a neutral. So that bar is not closing in its upper 1/3. So you just can't use that for a signal bar. And the fact that it's not a good signal bar and it's right into the EMA, that makes it questionable. It's just not a good setup. Even though you get a second entry long right there and you get a double test, there's a lot of reasons to say, hey, if we had a good signal bar, I'm going long there. But you just don't get a good signal bar. And so you just have to miss that trade. But let me see if I can find a double bottom. Okay, I found one here. It's amazing how hard it was to find a double bottom. But anyway, we're working down here. You can see we're on the far right hand corner. We're working down. You made a low. There's a little correction. You made another low. So now you got a double bottom. You got a first entry right there. And so far you got a double bottom. And then prices go higher. Prices are still working higher. and then suddenly you get this bar. So do you want to count that as a first entry, or do you want to count this as a second entry? With that being right at the EMA and a strong downtrend, it looks like a trend line working right down through there. Just like so. I would probably say, hey, we're going to count that as a second entry because the context is giving us a good entry right off the EMA. When you see the EMA and the trend line running congruently like that or together, that's a good sign that you got a good trend. And so really this broke higher and turned and went down. So you could have put a sell stop one tick below that, anticipating when this broke higher and starts turning down, you're thinking, hey, if it breaks lower there, that's a second entry. I'll just go ahead and put a sell stop right there and be prepared, and then suddenly that goes on out and you're already stopped in the trade. So you could count that as a second entry short, or you could say, if you didn't like the setup, you could say, okay, I'm just going to count that as a first entry. We'll see if we get a second entry. But that's a very good signal bar at a key entry point with the EMA. So I'm probably going to take that trade right there. And you can see it works on down. You would have already scapped out. So far you'd have a runner. This one you got a runner going, and we're still going lower. And so you see how that worked out. And this is just still working lower. So you would have got a runner on that one. Now, once we started going sideways here, you might exit because you don't want to give that money back. Normally what I like to do is start moving it down below each low, and you would have gotten stopped out right there if you did that, each swing low. But so that's how you do double bottoms and double tops. So I hope that's clear. You can count them both ways. People always say, they get confused when I call that a first entry, and then the next time I call it a second entry. You count it both ways, but it would be depending on the context of the market structure. So if it looks like you've only had one leg of correction, you can clearly see there's two legs back to the EMA and trend line there. This is not a very big leg, but it's still a leg that's two legs back. But if you had a double bottom right here and you just saw that looks like one leg back to me, and you can clearly see it working back right there, and you don't really get much bearishness until we've already started lower. But here you hit that line and it turns. And so hopefully you can see the difference there, what I'm trying to point out to you. But anyway, I hope this little Saturday lesson will be helpful to you, give you something to look at over the weekend for some of you. But I'm going to wrap it up. Hope you're having a great weekend. We'll be back Monday. Reminder, too, about my surgery on Tuesday, in case you've missed it so far. There won't be any mid-morning charts or chart lesson on Tuesday because I'll have my surgery, and I don't know how long it's going to take me to recover or anything. I'm assuming that I'll be able to see a chart Wednesday and come in and trade and do my usual day. And if so, it'll be a normal day and we'll have a chart lesson. We'll have a midday chart. But if I can't see, or they tell me I can't work or whatever, I don't know what to expect at this point. So basically they told me this was a minor surgery, that it should be quick and easy, and that I should be back on track pretty quickly. So we'll just have to see. But anyway, I'm going to wrap this one up. I don't want to make it too long. We'll be back Monday, and then we'll go from there for the rest of the week. But I hope you have a great weekend. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.